Alright guys, GenZ Raishiro here, and today we have a big portfolio update video. If you guys are familiar with my channel and portfolio, I have been hovering around the $10,000 mark right here, and now we're at $71,000. We got $51,000 in cash. Basically, I took a left turn with my investing method. We were saving for real estate. We took a left turn, and now we are here joining the YieldMax cult. As you can see down here, we got a bunch of YieldMax stocks and ETFs, and pretty much we are in the YieldMax cult right now. So I essentially moved the real estate money into this portfolio. And today is a big day because we finally dipped our toes into the funds. As you can see down here, we got ulty, we got 250 shares, and we have ymax, which if I can find it, right here, 500 shares. So we bought in big today. We can go to my Reddit right here, and I got the image right here. We spent $9,000 and we got 500 shares. And I don't think I have the pictures for YieldMax for ulty, but pretty much I spent about $2,500. And I said it right here, guys. Ulti is the black sheep. There's two people that look at ulti. You got the people that hate it and think it's going to go to reverse split territory. And you got people who say it's a money printer and it's going to hover around the $9 to $10 mark. And it's going to keep printing high distributions and keep printing money for you. I have never seen someone in between. You either hate ulti or you like it. And for me, well, I mean, I don't like it per se because the price keeps going down. But if it has truly found equilibrium at the $9 to $10 mark, then if it stays here for 1 year, then it's going to be printing money. But that's a gamble. It's a big gamble because if you look at the chart, it's down 50% on the year. And that's why, because it's riskier, we only have 250 shares of ulti. ymax is the most diversified fund from YieldMax, and that's why we got 500 shares of the ETF. We had $61,000, and the first thing we do for dipping our toes into a fund, we didn't buy 10 shares. We bought $11,000 to $12,000 worth of shares. And my income portfolio, or my main income stocks, we added 5 more shares of QDTE and 5 more shares of XDTE. If we look at this image right here, it's predicting that our annual income is $9,000, assuming everything stays the same, which everything changes always. But this is crazy to see something saying that you're going to be making $9,000 of annual income from doing nothing. I hope it's true. No one knows what's going to happen in the market. I'm not exactly a optimistic guy. I'm a pessimistic guy, and I think a recession is due to come. But who knows? We could go another 4 years with no recession, and these funds would print money basically if that does happen. But my main strategy is pretty much right here. If I spent $9,000 in ymax, I want to break even. So if I'm able to trim some shares, right, for a profit, that would be good. But I spend $9,000, and between trimming shares and distributions, I need to get back to $9,000 or double my money. When you double your money, you can basically take half of it out. If you sell half your shares, now you got your initial investment back. And at that point, you can go to sleep and not have to worry about a market crash. Right now, I worry about, I don't want to be political, but when Trump comes into office and things start moving left and right, this can be volatile for the market, whether good or bad. We don't know. If it's bad, then YieldMax is going to take, a hit, basically. If nothing happens to the market and it stays pretty good, then about 10 to 15 months from now, I would be paid $9,000 in distribution over that time period. And that means I broke even. I can sell half my shares, and then I can go to sleep without worrying about a market crash. But from now until that break-even point, I'm always going to be worried about the market going down, ymax, the stock price going down, and that's going to be a fear. Because if a market crash does happen or a recession does happen and the stock price goes down, then the probability is your distributions will get lower. So if it takes 15 months to break even, it might take 20 months, 30 months. The fund might go bankrupt. We don't know. It's literally in the fund's website that you can lose your money, and that that's the fear. And that's why I want to get to break even, because once I break even, take half my investment back out, then there is no fear anymore. All right, now that we are done with that, we're going to the second part of the video. and pretty much YieldMax has posted this, and they're releasing 2 more ETFs. And guys, as the title says, I think these might be able to beat YMAX. Now, let me explain. So, the thing about YMAX is it's a universal fund. You can see on their website, these are all the YieldMax funds and ETFs, right? The universal fund, imagine a basket, and that basket holds every one of these, right? And that's what YMAX is. It's really diversified. It's the safest ETF out there because it owns everything. But that's a double-edged sword. It's a good thing because it's diversified. But the problem is because it's diversified and owns everything, it owns the winners and the losers. People never talk about that. The worst performing ETFs on this list right here, it's in YMAX also. And obviously that's bringing down the share price and the distributions for YMAX. And in my head, I always wish that YieldMax had made a fund that cherry picked its own stock, and that actually came true. Right here, we have 2 things coming out. You got FEET and you got FIVY. These are pretty the same but slightly different. And the cool thing is it's coming next week. And I'm happy because I got money on the sideline, so I'm probably going to buy into both of them. My biggest hope though is right here. I hope it's a weekly distribution, because if it is, I'm going to probably put a lot of money into these. So as you can read, FEET holds the 5 YieldMax ETFs whose underlying securities have shown the best price momentum according to the Dorsey Wright's proprietary model. TLDR is they're going to be cherry picking the 5 best YieldMax ETFs at the current time, and that has the best momentum, and that's going to be inside the fund. That's really good because the assumption is it's going to choose the best, and with choosing the best, you should be getting the best distribution probably. FIVY is different. It might act like an anchor, which is good. You can see right here, it's the same thing, but plus those 5 underlying securities. So if you own FIVY and it has, let's say, these 1, 2, 3, 4, 5, let's say these top 5 performing ETFs from YieldMax. Let's use TSLY for example. If it has TSLY inside of FIVY, it's going to also have Tesla stock, the actual stock inside of the ETF, which would help with appreciation of the price. Because with options ETFs, you know, when the price goes up, the saying is it gets some upside, but it takes all of the downside. But if you have the actual stock and the stock is going up in price, because again, it has the best price momentum, so it's likely going upwards. And if you have Tesla, for example, and it's going upwards, because FIVY actually owns the stock, it means the price is going to actually go up. It's going to bring FIVY up in price, meaning appreciation of the stock and ETF. And it's also why I say it might become the best ETF from YMAX. You got 5 funds that are cherry picking the top 5, which cuts out the losers. It's diversified because it has 5. It's not one stock, it's 5. 3 is it holds the underlying stocks inside of the fund, so it means there's more upside, assuming the stocks go up, at least more upside than YMAX. And the 4th one is if they are a weekly paying stock, then this is going to be crazy, because from what we have seen with YieldMax, if it's a monthly distributing ETF, then it takes a harder hit to the net asset value. But with YMAX, for example, as they went from monthly to weekly, the weekly price difference from the distributions, there's a smaller impact to the share price when the X date comes and it takes the dividend out of the share price. That's why I'm personally hoping for a weekly distribution from FIVY. And also because who doesn't want a weekly paying ETF or company? But anyways, guys, if you made it this far, then give me your thoughts below on what you think about these ETFs, and if you think these are going to become the best ETFs of YieldMax. Leave a like and subscribe if you can, because I'm going to be making more videos on this. And obviously, I'm GenZ Ricero. I'm documenting my financial journey. And at this point in my financial journey, I am on the YieldMax train. We took a left turn and we're into income investing now. So let's see where that goes. And have a good day, guys.